Well, thank you for staying tuned. Well, again, Nigeria's oil and gas sector is showing signs of gradual recovery. Despite persistent production and security challenges, regulatory reforms, rising indigenous participation, and renewed investors' rates are paying off, reshaping the industry. Well, this was disclosed at a chat with partners and clients and market leader at PwC at a paper presented in Lagos. They spoke on the theme oil and gas sector performance, trends, and prospects. But really, what was said, and experts at this gathering noted that while the sector continues to face structural constraints, recent policy actions and market shifts are helping to stabilize outputs and restore investor confidence. Well, it says Nigerian crude oil production averaged about 1.64 million barrels per day in 2026, representing an improvement over previous years, but still below the country's estimated production potential of over 2 million barrels per day. The shortfall, said, is due to oil theft, aging infrastructure, operational inefficiencies, and years of underinvestment across key sectors of the Nigerian economy. And now, to get to this conversation, joining me live from Ghana is Professor Emeritus in Petroleum Economics, Executive Director, Iledare Foundation, Prof. Iledare. Thank you so much, Prof. Good afternoon.
Good afternoon, Tony Lopez. Nice to have you. The first time this year, I suppose.
Yes, yes, it is. It is. Prof, let's start with the state of the market, indeed. Governance, quality, regulatory credibility issues. What do you think, and what, with the present state of the market, do you think that we're getting proper interventions from all sides?
Well, you're talking about the downstream market or the
all of the entire value, all of the chain, the upstream, downstream, midstream.
Well, I think we are moving in the right direction. We are not where we want to be, or at least we are moving in the right direction compared to the past. At least for now, we have institutions that understand their expectations. Because when it comes to investment and the market, institutions, regulation, and investors' confidence. And you can see meetings with IPPG, with the presidency, the meetings with NMPC Limited, and the collaboration effort among all the institutions, and the way it is intended, the PIA. So if we continue in that direction, I think we'll be all right. The downstream market is evolving as intended. Pure competition is not what you can accomplish just by passing a reform. Here, you have to stay the course, and you have to understand that it takes time. And there will be participants that will want to have market power. It's not a monopoly. It's going to be difficult to have a monopoly downstream market in Nigeria. And with a regulatory institution that is active, it's going to nip it in the bud if there's any evidence of a monopoly in the downstream. At best, we have to start with what we have, which is oligopoly. Few players with the presence of a dominant participant. That's what we have. And the two dominant participants, if we group all the importers together, are NMPC Limited, Dangote Refinery, and the wholesale distributor. But I think we are moving well. I will just continue to let the regulators understand their role. And I said it over and over again. You don't measure the performance of the soccer referees. The soccer referee with the number of goals that are scored. No, it's the enjoyability of the match and the conducive environment in which the game is played, including the soccer field. And that's what the regulators put in for. But I think the market is moving the way they intend. Competitiveness. Even though it's not pure yet, but the downstream market in Nigeria is competitive.
Now, but Prof, despite all of this, of course, investors are still signaling a bit of stability in our market. We've seen renewed vigor. Look at the likes of Shell still investing so much, ready to invest more in Nigeria's oil and gas industry now. Now, would you say there's more alignment between all parties, government and industry players? What do you make of that?
I want to be optimistic, but I don't want to celebrate announcement economics. And most of these investments are nothing more than announcement to me. So it has to be realized by profitability. Again, I want the government to understand they have a role, but investors are looking at regulatory risk. They are afraid of policy reversal, this cost of capital. They want implementation credibility, which matters a lot. And again, that's why I will continue to say, so we need an anchor person that is apolitical. Every time that the investors are getting something as a result of having access to the president, I don't consider that as sustainable. And that's why I continue to advocate, because the investors, the biggest thing is that contract sanctity attracts long-term capital. Institutional strength lowers financing costs, and above all, is about trust. Like I said, the investors do not want to base their survival on political instruments per se. They want fiscal instruments that are sustainable. Listen, predictability, asset that Nigeria has when it comes to investment assets. That is the essence of the PI. Ability to be predictable as to what is coming from a fiscal regime dimension, not executive orders. Executive orders are too political for anybody to bank the investment on investment that will generate revenue for 20 to 30 years. I'm not saying there's no room for that, but investors want predictability. They want a situation in which
well, indeed, we'll try to get back, connect with Prof, and continue this conversation, speaking around investors signaling policy stability in hydrocarbon economics, seeing what's playing up in Nigeria's oil and gas market at this very critical time. Professor Omowumi Iledare, speaking with us from Ghana. All right, let's take a short break. When we come back.
So if we continue to depend on import, then we can know that we are going to depend on import. Then we can know that we are going to find exchange rate impact at the pump. So import exchange rate impact at the pump. So import depends to, because of foreign exchange exposure, it would depend on import, and because of the price of crude oil sales, the price to the refiners in Nigeria. Leadership that does not love money, but love humanity. That's what, in my opinion, and I might be wrong, with the power sector, in Nigeria. The deregulation and privatization. Am I saying the grid is essential for every industry and city. Transmission constraints will limit supply stability, and that's why now we need to move away from related Imo State Imo State to some extent, or Aba continental area,
Yes.
from Great Bar continental area,
Yes.
from Great Faith. I can see you. Thank you. I can see you. Thank you.
All right. All right. One more.
Not.
One more.
Not delimited for countries that are still emerging, and for countries that are still emerging, and Nigeria is one of them. But fortunately, we have natural gas. But fortunately, we have natural gas. And that's why the natural gas policy of 2017, was
so much, Prof, and do enjoy the rest of your day.